The CEO of the world's biggest Bitcoin exchange in the West is rumored to be aggressively trying to stop Bitcoin from being used in everyday purchases, sabotaging it on Capitol Hill right now. And why is that? $1.35 billion. That's what Coinbase made last year on stablecoin revenue alone. $1.35 billion. A world where Bitcoin is everyday money is a world where that revenue stream takes a direct hit. Today, I'm showing you how Bitcoin's most relentless lobby group is fighting back, what Jack Dorsey wants to know from Brian Armstrong, and the clip that might tell you exactly where Bitcoin is headed in the next 6 months. You don't want to miss this. Let's go. It's Satoshi time. Welcome back to Simply Bitcoin's Satoshi. I'm Sophie. Today, the Capitol Hill war over Bitcoin's future, how Coinbase's initiatives clash directly with yours, what Jack Dorsey is demanding publicly, and why the war machine's money printing addiction might be the most bullish Bitcoin setup we have ever seen. Let's start with something that should make you furious. Right now, under US law, every single time you buy coffee with Bitcoin, every $4 transaction, let's be so for real, coffee's not $4 right now, maybe an espresso, but whatever, you get the point. Every time you buy coffee, you trigger a capital gains calculation, a reporting obligation to our good friends at the IRS. So basically, you get the same treatment as a six-figure asset sale. Congress already solved this problem for foreign currency. Personal use foreign currency gains under $200 are tax-exempt, clean, simple. Bitcoin users get nothing.
You get nothing!
Senator Cynthia Lummis from Wyoming, the Bitcoin senator, filed a standalone bill, $300 per transaction threshold, $5,000 annual cap. The Joint Committee on Taxation scored it revenue positive, $600 million generated over 10 years. The White House backed it. Treasury Secretary Bessent personally offered to work with Lummis on guidance. $600 million, okay? So what happened? After the Genius Act passed, a new bipartisan draft from Representatives Miller and Horsford showed up. De minimis relief, stablecoins only. Bitcoin was excluded entirely. Relief was offered where it was least needed, withheld from the users getting the most punitive treatment. BPI has been in 19 congressional offices in the last 3 months pushing back. The response? Bipartisan agreement that the stablecoin-only approach is wrong. But the window is closing. Senator Lummis, the most important champion that this issue has, leaves the Senate in January 2027. If a package doesn't come together in the next few months, this opportunity may not come back for years. Regulate that. Now, here's where it gets personal. Reports started circulating that Coinbase lobbyists, not some random shitcoin outfit, the largest crypto exchange in America, have been whispering to lawmakers that nobody uses Bitcoin as money.
Nobody uses Bitcoin as money.
And that de minimis relief should cover stablecoins only, Bitcoin excluded, like I said. Why would they do that, you ask? Well, follow the money. Coinbase pulled $1.35 billion in stablecoin revenue last year, almost entirely from interest on U.S. Treasuries backing USDC. Bloomberg estimates that number could 7x under the Genius Act. So every person who uses USDC instead of Bitcoin is a person whose dollar sits in Coinbase's reserve pool, quietly generating yield. For Coinbase. Not for you. A world where Bitcoin becomes day-to-day money is a world where that revenue stream takes a direct hit. So they're fighting it.
And many of them are so inert, so hopelessly dependent on the system, that they will fight to protect it.
Jack Dorsey did what Jack Dorsey does. He went on X and called out Brian Armstrong directly and asked him to publicly confirm whether Coinbase supports de minimis relief for Bitcoin, not just stablecoins, Bitcoin. Coinbase's CPO pushed back and said they support Bitcoin-friendly tax treatment, but BPI is demanding a public roundtable to clear the air because there's a difference between what you say in public and what your lobbyists are whispering on the Hill. Sound familiar? And this is exactly why self-custody has never mattered more. If Coinbase wins this fight, Bitcoin stays trapped as a portfolio ticker, and you stay dependent on a company whose incentives are not aligned with yours. The Bitcoin way is your Bitcoin IT team. Self-custody training, cybersecurity, Plan B residency, over 20 years of expertise helping real people take real control of their Bitcoin, simply, securely, and with you in complete control. Go to thebitcoinway.com/simply to book your free 30-minute consultation. Tell them Satoshi sent you. Okay, I have to talk about this one because even Coinbase's own marketing team knows the truth. They put out this ad, and the vibes, immaculate. But listen to what they open with.
Every day, the Fed prints an average of $465 million. That's 26,000 shipping containers a year, created out of thin air. Maybe that's why the dollar loses value over time. But there's one thing they can never print more of: Bitcoin. At the size of a quarter, this is all there will ever be. Shouldn't a store of value hold its value?
Their own ad, Coinbase, showing you the money printing stats, ending, there's one thing they can never print more of, Bitcoin.
The government can't print gold, government can't print silver, government can't print Bitcoin. And the government can print dollars, and they're going to print a shitload of dollars.
And then their lobbyists walk up to Capitol Hill and work to exclude Bitcoin from everyday payment tax relief. They know. They know exactly what Bitcoin is. They just want you to fight fiat debasement with stablecoins that they control, where the yield goes to them instead of the money their own commercial is pointing you towards. That's the whole game. Let's make this worse. Or better for us. Now, here's someone with no such conflict of interest. Jack Mallers, the CEO of Strike, the man who's done more to make Bitcoin a real payment network than almost anyone alive, just putting out the warning that you needed to hear.
Listen, it is what it is, and this is so bullish for Bitcoin. They're going to have to print so much money. Bitcoin is really priced with how much fiat currency is sloshing around in the world. And in order for all of this to play out and work, we have to debase our currency, we have to devalue our debt, and we have to create more fiat. It's going to send Bitcoin nuclear.
Bitcoin doesn't just go up because TikTok says so. It goes up because every new dollar printed makes every existing dollar worth less. When the Fed panics, Bitcoin gets a pay raise. That's not vibes, that's math. And speaking of printing, let me introduce you to Professor Jiang. I hadn't heard of him last week, but here he is apparently now the face of America's Ponzi economy.
But remember, the problem with that is that the U.S. economy is a Ponzi scheme. It's dependent on the GCC investing in AI, in tech stocks, in startups like Uber in order to finance the U.S. economy. If this financing stopped, then the U.S. economy could face collapse.
War pops off. Oil spikes. Congress magically finds another $1 trillion. The rest of us are told to clap and keep swiping the card. The only way the fiat system survives is by dragging you deeper into debt while they print money to bail themselves out. The dip is real. The fear is real. The war debt is real. But the math is, as always, even realer. And if you're watching all of this unfold and thinking, okay, I need to stack, here's the easiest way to do it right. Bitcoin Well is the self-custody Bitcoin on-ramp. You buy Bitcoin directly into your personal wallet. No custodial risk, non-custodial by design. Trusted by 50,000 plus users, publicly traded, daily recurring buys available. Sign up at bitcoinwell.com/simplybtc. Through our link, you can get 3 chances to win 1 million sats. That's 0.01 Bitcoin. Not nothing. That's bitcoinwell.com/simplybtc. Let's close the show with 2 people you don't usually hear in the same sentence. Michael Saylor and Colonel Douglas McGregor, the Chad and the war planner. And both of them are saying the exact same thing. First, Saylor.
What I would say on this topic is the U.S. could own 20% of the network like that for free. The dollar would strengthen, the nation would be enriched, And the real promise is if you own 4 to 6 million Bitcoin, you're going to pay off the entire national debt. You're going to neutralize it. We can generate a $50 trillion to $80 trillion benefit to the United States people, to the citizens, to the taxpayers, and we can do it simply by seeing the future. It cost $6 million to buy Alaska. The payoff was $1 trillion. Just like right now, you can literally buy it for a song and dance. That's the opportunity. The risk is that you wouldn't want the Saudis to buy it first, or the Russians, or the Chinese, or the Europeans. And there's only room for one nation state to buy up 20% of the network. And obviously, I think it should be the United States.
$50 trillion to $80 trillion. $80 trillion. The Treasury already prints trillions to patch holes. If they swapped paper for sats, the asymmetric upside could dwarf any stimulus program ever written.
You know, I've long contended that anybody who has zero of this is really, really missing the most asymmetric bet that I've ever seen in 40 plus years of trying to make asymmetric bets.
Whether they ever do it isn't the point. The option exists, and it's gaining believers in rooms where the actual decisions get made. And then there's Colonel Douglas McGregor. His day job used to be briefing generals, not hyping crypto. So listen to what he has to say about where Bitcoin is headed.
As Bitcoin can go from 10,000 to 1 million very, very quickly. Now, it's not going to be perfect. There will be speculation. There will be problems. It's a bumpy road. But I think ultimately it will prevail because you can also do business with it. But my point to people is, and I don't know what the final outcome will be, that's fine. Get back into it because it will go like a rocket. People are talking about, well, it's going to be worth $1 million a coin. It's coming. They're right. May not be coming quickly, but it's coming.
When a career military strategist says he isn't making number go up memes, he's acknowledging what Professor Jiang just warned about. The U.S. economy is a debt Ponzi scheme that only survives by printing faster. In that world, hard assets don't drift. They reprice violently. McGregor's telling you to be on the right side of that. So whether it's a corporate executive calculating how to vaporize the national debt or a war planner watching the fiat system crack under its own weight, the conclusion is the same. You need Bitcoin before the next fiscal emergency forces everyone else to figure it out. And if you want to be in the room where the next chapter of Bitcoin actually gets written, Mining Disrupt is where that happens. The world's largest Bitcoin mining expo, the biggest names in the industry, cutting-edge rigs, Bitcoin and AI integration, live-streamed keynotes, and networking you cannot get anywhere else. Grab your tickets at miningdisrupt.com and use Simply Bitcoin for 20% off. Do not sleep on this. Here's what I want you to walk away with today. The most powerful company in crypto is on Capitol Hill right now, fighting to make sure Bitcoin stays in the box. That's real. BPI is fighting back with 19 congressional offices and a window that closes in 2027. That's real. The war machine is printing faster than ever. That's real. But the math is even realer. Every dollar they print is a reason to stack. Every lobbyist they send to the Hill is a reason to self-custody. Every Coinbase commercial showing you the money printing stats is an accidental argument for the money they don't want you to have. Stack responsibly. Self-custody. Don't wait for Washington to save you. They're the ones lighting the fuse. That's not a lobby battle. That's a verdict. Thanks for watching Simply Bitcoin Satoshi. Don't forget to smash the like button, share the show with your friends, drop a comment below. I read all of them. Follow me on X @InternetSophie. And as always, stack, slay, and say bullish, baby.